Hello and welcome to this live session, and this is very special session. I'm getting questions from so many investors and people from my community that there are market conditions where stocks are running here and there, and so much of opportunity is there. You see rockets everywhere and people are making money left, right, center. And why just stock market? A lot of people also see their friends making money in crypto, somebody making money in real estate, and somebody making in other asset class. And we always feel this FOMO, fear of missing out, कि यार ये लिया होता तो अच्छा होता, this I took it and then it has run so fast, much higher than my returns it is giving. All those kind of concerns we generally have as an investor. So this particular session is for somebody who is getting into that zone of FOMO. And believe me, I have also been into this journey. It's not like I don't get FOMO, but I have tried to devise some methods, some ways, some objectivity to this entire madness so that I can remain calm, distraction free, and focus on what it is essential. So if you are ready for this session, let's dive in and let's understand what this entire session is all about. Awesome. So I'll share my screen now and let's go to the objectives. What are the three concepts we want to learn in this particular video? So first, we see a lot of screenshots on social media, are saying I've made this much amount of profit. I did option buying, I did option selling, and 1 crore, 50 lakh one day. All these kind of things we keep saying. How many of you have seen this in the real market? Just type yes in the comment box. So this is where it creates a lot of FOMO when we see others success stories, and this has moved that much and this has moved this much, and a lot of other stocks and asset class going up. We see like crypto going up so fast and it doubles in no time, and all those kind of things we keep on hearing, and that creates also FOMO. And third, market is a regret machine. If you buy too early, you might feel right that I could have bought something else, made some returns in the meanwhile. Sometimes you might feel that it is too late, I got in and now it has started falling. If you hold it and it starts falling, you might feel like, oh, isko to bech dena chahiye, I should have sold it. So market is a regret machine. So ultimately you need to remember that your objective is to make returns beating index. Mainly beating index should be your aim in the market, and then everything else is secondary. Okay, so as far as you are able to do that job properly, that is the first thing to focus. And I keep telling this, and some of my members in the community also keep telling this, that remember that you can't marry all beautiful women in the town. Okay, you need to stick to what you have. Of course, you can explore, at least in stock market, you have luxury to switch, but at least have a process in place, and that is what exactly we are going to discuss. And fourth is very important thing in stock market. This is again, based on my experience of more than 14 years. What I've understood is in stock market, if you want to make money, you need to be objective. I cannot stress this enough. So you need to be objective when there is a fear. You need to have that courage to put money. When there is greed, you need to have that courage of saying no and selling if it is required. When everything is moving, you need to avoid that fear of missing out. And you should have that objectivity to stick to your process and then adapt to the strategy. Of course, the market condition change. You need to change your strategy. But then you need to stick and be very objective. Then only you will make money. Believe me, this is like the single biggest truth I have discovered in the stock market, that at all times be objective. Okay. So how many of you are ready for the 10 points which I'm going to discuss with all of you? These are the 10 points which will help you stay very objective, stay away from all the fear of missing out, and still you will be able to make decent returns. That is what is the aim for this particular session. So take a lot of notes and let's dive in. Okay, so let's go to the first point, which is follow asset allocation. I've seen a lot of people, when market are doing good, they jump from real estate to equity, then they break FDs and they again come to equity. By the time they come in, the equity boom is almost over. And then, they again jump into something else and something else and something else. Okay, so don't do that. So once you have decided that this is your risk profile and this is your overall allocation to equity, stick to it. You don't need to like switch from other asset class to equity just because equity is running and doing good. If you have some allocation in gold, you no need to dilute that and jump in. So if you keep on jumping from one tree to other, you will not be, able to stay anywhere. Okay. So I did all these kind of mistakes, and particularly I see a lot of people, even their emergency fund, they bring into the markets when the markets are doing good, and they cannot just resist this FOMO effect. Okay. So I've discussed all these things which are very, very essential in terms of your personal finance in this video. Go through it. Don't compromise with your emergency fund and health insurance and all those personal finance needs which are there. Stick to it first, then stick to your asset allocation. Very, very important. First point. Second point is never take leverage. I see a lot of people, they borrow money either through margin, or they borrow from their friends, or they take personal loan. Okay, which is really, really a dangerous thing. Don't take leverage to participate in the market, whatever amount of FOMO it is. Please, please, please avoid that. Okay, because when you take this kind of leverage and the market turns the other way around, you will be like screwed. Let me tell you that. Okay. And a lot of people make these mistakes. Okay. There are so many mistakes as an investor, all of us make, and I've captured again in a separate video in a detailed way, 10 biggest mistakes. Even I have made it. So whatever I'm telling all of you guys is all I have done in the past. And then I've learned the hard way. Some I've learned from others. But all these things I've observed, some of them I've already, gone through this entire journey, because I'm practitioner. I'm, doing the same thing which all of you are doing, but it is just that I've been doing it for a long period of time. Okay. So that is the second part. Third is the KISS principle. Okay. This is not like that KISS principle, but it is called keep it simple principle. And I cannot stress this enough again. This is like a very, very powerful principle. Have a simple system in place. Okay, first thing, have a simple system in place. Have simple asset allocation rules. So don't complicate your asset allocation rules. Once you have decided that, okay, 60% equity, 30% debt, 10% real estate and gold, stick to it. Don't make it complicated that every year I'll change this much percentage, every 6 months I'll review. Don't do that. Okay. Simple portfolio allocation rules. So for your portfolio also, you should have rules that how much you will put it into, say, trading, how much into long-term investing, how much you will put it into your core portfolio. You should have that simplicity and structure designed upfront, even before you start investing. Like say, for example, in my case, I know that 70% of my portfolio will be into core portfolio. Whatever is the momentum, my 70% will be into core compounding company, because I want capital protection. I want stability. I want that constant compounding to happen. At the same time, I want to also ride some of the tailwinds and some of the special situation. I have a satellite portfolio, which is 30%. So I have my portfolio allocation decided upfront, and that doesn't change, whatever is the market condition. Okay, so that is what you need to follow. Keep it simple. And today's time and age, less is more. Believe this. So the less complicated you make, the more beneficial it is. You need to keep it simple. Everybody clear with this so far? Keep it simple. And a lot of time people think that only complicated things work in life. But no, only when things are simple, that is where it creates that magic. Now, fourth, this is very, very important point. I cannot stress this enough, is in terms of building and following your system. So what does that mean? What does that mean in terms of building and following your system? That means that you need to have your buy, add and sell rules. What are the conditions? If it is meeting, you will buy. Stick to that screening process. When you will add your position. and when you will exit. This again, even before taking position, this should be super clear what you are doing with particular position and how it needs to be dealt with. And learn to say no in life also, right? And also in investing. If it doesn't stick to your screening, it doesn't fit to your screening process, it doesn't fit to your system, then simply tell no, I'll not buy it. As simple as that. It can run 2 times, 3 times, 5 times, it's okay. Because when we start, digressing from the system, that is where the problems start getting created. That is my personal experience again. Because then you don't know what to do, right? Because you are going out of your path which you have created yourself. Now, I've also created again this video, like how you need to be better investor and how you can, understand this entire system. So I'll keep on sharing some of the videos so that you can go deep dive. I'm just covering the broad overview, but if you want to go deep dive, you can watch these videos and you'll get better perspective on the points which I'm mentioning. So this is the video which I've created in terms of how you can be better and better as an investor every single time you are doing these things. Okay. And by the way, if you are not following me on Twitter, this is my Twitter handle. Go and check it out. I post a lot of interesting tweets and share a lot of knowledgeable things on Twitter as well. So just go and check it out. Now, the next one is don't spend time on screen. This is again a very, very big distracting factor I see. Lot of investors, even they don't do intraday, they don't do F&O where it doesn't require their constant screen time. They keep on staring the screen and they keep on refreshing the screen. As if, if they refresh 5 times in 1 second, it is going to, change the stock price. Okay, so the stock price will move irrespective of whether we'll refresh the screen or watch the markets, right? So that is where it is very, very important to have focus in the market. And what I do personally for bringing focus is I use a lot of tools. What I do is I use different tools which will help me in automating and streamlining all these things. So I use tools and automation. I spend time productively and spend time on other things which matters in your life. It could be listening to music, it could be reading books, spending time with your family, and do deep work. So what I do in my work pattern is every single day I follow mainly 3 tasks I want to complete, and I do it in the spurts of 1.5 hours to 2 hours. Okay, so one task, 1.5 hours to 2 hours, single focus, no distraction. I keep my mobile phone also away, and that is how you maximize your productivity. Because there is no need actually if you are like not an intraday trader or not a F&O player, then there is no need to watch the screen 5 times in an hour or something. Okay, even 5 times in 1 minute people refresh. Okay, don't do that. And even for my core portfolio, I follow a process. Like I have an Excel template and I have a checklist and all those things. So when you build these kind of processes, that is where it will be super useful to all of you. By the way, if you are enjoying this video, just type enjoying in the comment box. And what I'll do is I'll share this gift. So this Excel I've shared in multiple other videos also. But if you don't have this Excel, just go and grab it. You will see this in the description below. Just go to the description below, and that is where you will be able to see the screen. I'll also post this as a message if you don't have this. Okay, so I'll just post this as a chat over here, and you can check it out. Okay, so this is how you need to have checklist, you need to have tools, and that is where you bring super focus to your investing process. Okay, and this is the link. If you don't have the link also, this is the link. You can check it out. Now, 6th, this is one of the most important process I'm telling all of you. Okay, is unfollow all the people who are distracting you. Okay, unfollow all the people who are distracting you, particularly those who are posting 50 lakh, 5 lakh screenshot, doing this in the market, doing that in the market. Anyone who is doing all these things, just avoid and unfollow all these people, because they are the reason where they will emotionally disturb you and create that FOMO. And as I said, read books, listen to a lot of music when there is no need of you spending the time in the market. I've also shared a list of 10 best books you can read And that is what will keep you, focused, and your system will work for you, your automation will work for you, your tools will work for you, and you can be at peace. Very, very important as an investor, because when you are not peaceful with yourself, and when you are distracted yourself, that is where the real problem will start. Okay. Another thing which I do is I follow sector tailwinds. Okay. So what I mean by sector tailwinds is I try to see which sector is having high probability of winning. Okay. High probability of winning. And for that, what I do is I use a tool called ridewinners.com, which is again my proprietary tool. It is a paid tool. And every single day, whatever, the sector comes in, like say for example, on February 11th screen today itself, there are so many companies in the agri-chemical space that are coming in the screen. And same way, there might be a lot of auto ancillary companies coming in the screen, and so on and so forth. There are building and heavy material projects and all those things. So that is where I choose 2 to 3 such high probability sectors, and I only take positions on that. Even if other sector something is moving, but if it is not coming in my screen, or it is not a high probability sector, then I don't follow that sector, because ultimately you want to make big money with a lesser number of position. That is again, less is more. Okay, everybody clear so far? And by the way, if you are liking it and if you are taking notes, just hit a thumbs up. And if you are not subscribed to my channel, just make sure you subscribe to the channel, so that a lot of important videos you don't miss it. Now next is very important point. A lot of people get swayed is into low liquidity ASM and circuit stocks. So what happens is these stocks have like very short circuit filters, like 5% upper circuit and very low liquidity. So my mentor used to tell me that it's like eating a akhrot. Eating is very easy, like a monkey eating full akhrot, and then taking it out is very painful. Same thing is with all these kind of stocks. Okay, you can eat it, but when you try to take it out in the morning, you cannot take it out. Okay, it will be very, very painful. You know what I'm talking about. So avoid these kind of traps where there is low liquidity and some operator driven activity that is happening. The stocks are in ASM, goes circuit to circuit. And also very important is sticking to your position sizing rules. So I have different rules, even in my hackathon, when I do it with my community, I discuss the buy and sell system, and along with that I share a lot of position sizing rules also. So what I do is initially I take a tracking position, and then I follow averaging up principles. And for each of the position, I have a capping that, for core portfolio maximum, this is the range of my position sizing. For satellite portfolio, this is the range of my position sizing. For my sector buckets, this is the range of my position sizing. Why? Because otherwise what will happen is you will not have good risk management in place. When things go wrong, you will like blow up your portfolio. So the worst thing we should be doing in the market is getting out of the game by burning the entire capital. And 10th point, which is super, super important, which I call power of one. What is this power of one? Let's understand this. So power of one is basically sticking to one thing. I see a lot of people, they jump from one YouTube channel to another, one book to other, one strategy to other, and they get confused and they try to mix everything and they don't get results. The more you get into one thing to other and other and other, it will keep creating problem for you. So what I follow is one mentor, learn from practitioners. Again, very important. If you have a mentor, make sure that your mentor is also actually practicing in the market, not like just telling you something, but putting money into FD. No, not that kind of mentor. You should have a mentor who is having full skin in the game and who are practitioners. Probably, best is having mentors who are full-time investors and who are actually executing the same system which they are teaching you. Okay, have one system in place. Okay, stick to one system, one strategy, one asset allocation rule. When you do this, it will bring you super focus. Read this book, which is called The One Thing. And today's time and age, if you are able to do this, like if you are just able to focus on one thing, you will be about 95% of other people. So stick to one thing. And that is where you will get extraordinary results. That is where you will not get swayed away by all these FOMO effect. That is where you will have super focus in place. Okay. So hope you understood this. Let me just recap all the points again, all the 10 points. And we'll do a Q&A also. If you have any questions, please type in the chat box. So first, follow asset allocation rules. I'll just keep flashing it here. First, follow asset allocation rules. Second, never take leverage. Third, keep it simple. Fourth, build and follow your system. Don't go and jump from one things to other. Don't spend time on screen. Have a super focus. Do other things and just build system. Use tools. Unfollow distracting people from your life, from your journey. Focus on sector with tailwinds. Avoid low liquidity ASM and circuits to circuit stocks. Sticks to position sizing rules, and then follow the power of one. So this is the brief summary of all the 10 things which are super important in your journey if you want to avoid FOMO and you want to be better in your investing journey. Okay, and if you want to learn building these investing system and decouple yourself from emotions, you can go to this link and check it out. There is a free workshop which I'm doing for all of you. If you are interested and you want to understand how I build my system, you can go and check it out. I've also shared the link in the description, but this is how you can also build these kind of investing systems. You can also do it peacefully, follow rules, and apply automation, and then have peaceful investing journey. Okay, so if you have any questions before we wind up, just type in the comment section, and happy to take it for a couple of minutes, and then we can wrap it up this one. Superb. PV Murlidhar is saying liking the live session but unable to make notes. That's perfectly fine. You can watch it again. It's going to be there on my YouTube channel, and you can always watch it later and take notes. Okay. And if you also want any new topic which you think is very important in your investing journey, write in the comment section what is the topic you want to learn and understand from me. I'll be happy to make a video. Even this video I shooted because a lot of people in my community asked that, we are facing this FOMO situation and there are so many stocks that is coming in the comment box and all those things. What is that you do in point 7? So focus on sector tailwinds. So Vishal, what I do is basically I have my own screening process which I focus on. This is what I showed you in the point 7. And what I do is I have different filters. So first filter I use is, which sector are coming in the screen. So say for example, building heavy projects, and say even sugar I think was coming in the screen if I'm correct. And all these, whatever healthcare and pharma drugs is coming in the screen. And then we have few more. Let me just check it out. Real estate coming in the screen. So if you have these kind of 2 or 3 sectors, then what I do is I just go to the trend and I just filter those sectors. Okay, so I just see if agri-chemicals were coming in the screen, I'll just filter with agri-chemicals. Then I filter further by different other parameters. Like I want to see only stocks which are having ADX say greater than 30. Or even RSI which are greater than 55, something like that. I'm just giving you example, and then I'll get only like 4 or 5 stocks that okay, I need to just focus on this 6 to 7 companies, and then I see which company is coming very frequently on the screen. Then I see the chart, and then I go deeper into the fundamentals. I again have a framework which is called 4-cylinder model. I go into that framework, and then, within 15 to 20 minutes, I shortlist 1 or 2 companies out of it. And then again, that position sizing rules and all those things I follow. So this is how I declutter myself, that I don't need to look into like 50 sectors which are there. And I need to just focus on things which matter. Okay. How do you ride petrochemicals and metal stock? That I use in satellite portfolio. Okay, so our core portfolio, which is around 70% for me, that is more of a long-term portfolio, and the 30% is where I play all these commodities and petrochemicals and metals, because that is where exit is very, very important. If you don't exit properly, or you don't have an exit strategy in place, you will get butchered. Okay, so that is what is very important. How to use ride winners? So you can actually, once you sign up there, there is a link of question mark. You can just watch the video, or if you are part of my community, I have a separate module on how to use it and how to go about it efficiently. Then Anil Gore is saying how to control fear and greed. So to control fear and greed, you need to be objective. And to be objective, you need to stay away from the market. It's counterintuitive, but true. So you need to stay away from the noise in social media. One, you need to stay away from the screen time where you refresh and watch the screen real time. That is where fear and greed will be very intense. And do the automation, as I said. So you can set up rules in TradingView. There is also a video on my YouTube channel. Go and check it out on TradingView. So I've shared how you can build automations, how you can build alerts. And then only spend time over a weekend, follow your system, and then let the system tell you when to exit and when to enter. Don't get swayed by your own emotions. That is the whole thing. And also, what has helped me is doing some bit of meditation, listening to music, reading books. So whatever hobbies you like, you engage more over there. That will help you stay away from all the kind of emotions attached with the market. Okay. So hope that is useful. Okay. Awesome. So that's it, guys. There are no further questions. So I'll take your leave. Thank you so much for being till the end. Thank you so much for watching this. And we'll see you in next live session. Until then, keep learning and don't get distracted. Stay focused. And, that's it. Bye-bye and Jai Hind. Take care.